Hello, guys. How we doing tonight? You want to apologize for the delay. I'm not gonna make up any excuses. I just lost track of time. Here in Quebec, whenever it starts getting hot, right? We have good winters and good summers, and I just took so much light today, so much sun, and I don't know if you guys know the feeling, but when you get a lot of sun in a day, you get so tired. It's crazy, but it is beautiful weather outside currently. I really love winter. I like winter more than summer, but it's nice when you've been cold for the last 4 months to be able to go outside without a short on and being very hot, I guess is the best way to put it. Definitely very nice there. So yeah, I'm doing great, Justin. Just truly tired from that crazy um hot day we just had today. But I did a little post about it, influencer me, right? Um, but just enjoying the fresh air, whether it's a good day or a bad trading day, going outside just gives you an opportunity to reflect on what you've done, right? So if I stay on my computer for the whole day, it's very hard to be objective about my trading that day, for example. But if I take a step back, and for me, the best way to do that is to go outside, take some fresh air, truly a whole change of environment, right? And then once I get back to my chart, I can say, okay, well, I performed good. Touching grass is a real thing. Yes, sir. Yes, sir. Definitely. And I mean, I don't know about you guys, but today I had a great day. I missed the first entry, but managed to catch a riskier, but still a valid continuation. Sorry, I am getting a call. Let me just mute that. I'll answer that later. But what I wanted to go over is my continuation model, which I haven't talked in a while because there hasn't really been any worthwhile continuation opportunities. I haven't taken a continuation trade in quite some time. The only time I'll take it is if I miss the entry and it's still valid, which is pretty rare, or if I don't have an entry on the first leg and then I'll take a continuation. So I'll walk you guys through that, even though that is not the valid trade. We'll look at everything anyways, right? Let's go in replay mode here so we look at the day. You might notice I do have the regular training hours gap on my chart right now. Today was a great example. In trending conditions, it is super useful. Definitely. I would absolutely recommend using it whenever you are specifically in trending conditions. So if we have a trending day, how do I define that again, guys? Well, Asia and London go in the same direction, expand. Today is not something I would figure out to be a trending day. That's the truth, right? Because I would see this, but what I would focus on is the SMT at the lows. Let's actually remove our previous objectives. These were the levels that I was trading today, but here, I'll leave the one that's above. But I want us to focus on these lows right here. Because as you can see from my indicator here, you'll see that London low has been taken out on ES, but not on NASDAQ. That is SMT, right? And SMT, I believe I had Nico today. Let me actually grab, I took a picture of his question so to make sure I did not forget it. So let's actually go look at that. So we had a small SMT formed at London lows. I know you talk a lot about session SMT. Would that have been enough for you to frame higher prices during New York AM? Yes, right? That's what I'm pointing out. Right now, I did want to mention that these lows being formed give me a high probability low of day. And see, that's not even the low of day, right? But this is protected. This low should hold. So now my bias is to go bullish. Why? Well, this is reason number one, right? This SMT. Reason number two is we went open into a low. And now if we look at 930, we expanded back into a high. So what is the most probable direction after this movement? Continue towards a high, right? Open, low, expand towards a high. Power of three, right? You have your accumulation, manipulation lower, distribution higher, confirmed by SMT at a key time, which in this case is in regards to the session, right? London high and low. Oh wow, that all got taken. All right, sorry, I was looking at the regular training hours gap. And whenever we have things like those, I like to use the regular trading hours gap, especially when we have a session just before. But if we go in the 1 minute chat, because we had CPI at 8:30, right? Not a session, sorry, a news. So if we look at CPI, you can use the CPI candle as a range. I prefer to use that when it forms a fair value gap. And see, in this case, in our 1 minute chart, we did form a fair value gap, which you can use as a higher time frame point of interest. But you can also use this range as sort of a premium and discount, right? Just as you would with any different range. Whatever you decide to use to understand, what's important to know is that we still have liquidity above and we have liquidity below. Now, both these targets are high probability. Of course, the higher probability one is the one above. But if you look at ES, right, it's the same thing, right? We can look at this bottom candle where it got taken out and you can say there is SMT at this place. But what I'd like to focus on, instead of looking at all these different things, is keeping it simple by just saying, let's use the regular trading hours gap. Oh, I just pressed on space. Sorry about that. And as you can see here, we traded down into the midpoint, the consequent encroachment of the regular trading hours gap. What did I talk about during the Sunday outlook? Gap divergence, right? Opening gap divergence. This one traded fully through, did all of it. And also this area, we didn't we have SMT? Yes, exactly. So we have SMT here as well. You can go very simply. I like to go quite in depth when we do these reviews, right? To showcase all the reasons. The truth is, SMT London low, structure telling you to go long. All right, bias is long. SMT on the lows, that's it. It's done. Now you can then look for a long. Now this is a breaker block, right? Swing low to swing high, broke the low, broke the high. But if it's easier for you to spot, you can also use this one. You guys know me. I like to focus on the first one that is created. And if you look at that, you have inversion fair value gap that you would have been looking for an entry on, but it did not come. Now, we talked about it this morning. There is a volume imbalance here, which means that you actually had the opportunity to enter specifically on this fair value gap right here. As you can see, volume imbalance, so you include it, and then we just tapped right into it on that candle. I personally missed that entry today. I like to watch something while I'm trading, so I get my stimulation from something else than my trades. It helps me not FOMO, pretty much. And I was just switching and trying to put on my YouTube video when that specifically happened. So I completely missed that one. Yes, sir, it is, right? Overlapping fair value gap, that's your unicorn. Next candle over, tapped in one tick. I don't look at it as a volume imbalance. I include it as part of the fair value gap. Just a random volume imbalance, I don't use that to enter on trades, ever. But because it is part of the fair value gap, this is a retracement into the fair value gap. So it's important to make that difference, because I won't use a volume imbalance as a PD array, ever. But I'll always include them as part of the fair value gaps that they are next to. I think that's very important to mention as the difference. Now, of course, if you look at this, you have a 3 PD array rule stop loss. Let's look at it. You have inversion fair value gap here and here. So your stop is actually very, very nice just at the low of this fair value gap. So you had the opportunity for a shit ton, let's be honest, right? Let's use the real terms of return, right? Just to 4 standard deviations. By the way, guys, these are deviations of the regular trading hours gap. Just to 4 standard deviation gave you a total of almost 9R. So pretty crazy there. And Justin, you know me, CPI gives me direction. CPI is a bullish candle. I'm going to look for a retracement inside CPI and then continuation higher. What's my invalidation point? If we expand past this low. Right, so you really don't have to think any much more than that. But really, the SMT at London lows with the current daily structure, when I say you always have to align with daily power of 3, that's what I mean. I understand that at this point in time, my high probability trades are to trade longs with this current daily structure. And if we had different daily structure, well, I might say that I need to short at this area. And you know, it's not a foolproof plan, but it's a very high success rate of a confirmation, right, for my bias. Now, this is the actual trade. This is the valid trade. This is the Rice trading model. Now, what if you missed it like my dumbass this morning, right? And I mean, this was a very quick one. We could go to the seconds chart and you'll see this was like you had 3 or 4 seconds to enter in this trade. And if you actually used limit orders, you wouldn't have been stressed with that. But you guys know me, I don't like to do that. Now, what is a continuation entry? I trade the same move, the same idea, but all I'm going to do is wait for a PD array to be respected and enter on a change in the state of delivery. What does that mean? Well, I'm waiting for another PD array to be respected. So for example, a bullish fair value gap right here, and then all I need is a change in the state of delivery. So as soon as we close above, creating an order block. Now I know that's different for a lot of people, and I know some people don't use them in the same way that I do, but I'm just looking for a close above a previous bearish candles open, and I take a breakout entry, and that PD array that I use for my entry is my stop loss. That's it. So I just wait for the respect of an inefficiency, confirmation on on the close of this candle, so the next candle over is my entry. Now these are much riskier, so I just go half risk when I take them, and I probably take one every 2 months. During the summer month, I'm thinking I'm gonna have a lot more. When price tends to be less volatile is where I get a lot more continuation opportunities, and that's pretty straightforward for me, right? And then I had this clear liquidity objective from our daily chart, and then I just looked at deviation levels 2.5. Once 2.5 get expanded through, I am looking for 4 standard deviations. So still pretty similar return on this continuation opportunity, but it is a much riskier trade. It is not a unicorn entry at all. I'm taking the continuation of my setup. And if you look to the left, then you might find a super old breaker block and say, oh, well, this is a valid unicorn. But I don't use old breaker blocks. You guys know me. This is what I call a continuation entry. So it's very near my entry. If I miss it, I can wait for retracement, respect of an inefficiency, and then I'm basically taking a breakout out of this range, and my confirmation is creating an order block. So closing above the open of an opposite close candle. So in this case, bearish candle, I want us to close above the open, forms my order block, and I'll just enter on the next candle right away. So on the open of the next candle. That's my continuation model. And it's very simple. I need to have a valid entry in some sort of way, a valid move more so, not a valid entry. That just didn't give me an entry. So sometimes it doesn't. Sometimes I miss it, like would be the case today. But it's still very valid. And the important part here is if you look at that entry, we did not yet take this level. So I entered on the open of that candle before we took it. So now you have additional confirmation by that level being already correct, because that would be your partial objective, right? If you entered here and your stop was here, a great, well, not a partial, but more so of a confirmation, right? I wouldn't look to partial this early on data highs. You could, but definitely I would look to hold up until our daily objective that is so near. But this would be like your confirmation, right? If we fail to expand past this, in some scenarios, I might go break even. So just a lot of confluence making this setup good enough. But truly, the best way to go about it is really just to not miss your entry. I just wanted to mention it because I personally missed it this morning. Was there any SMT? I believe there was, right? Yeah. And there was also SMT here, which is a great confirmation to hold. But I mean, at that point, you're already in the trade, so you might as well, right? I don't trade a lot of those, as I said. Still wanted to mention it because today I did. Today I missed that first setup. But if you had the correct entry, right? Because yes, the first entry is the good entry. The other one is a worse version of it. You had a lot of return just to 4 standard deviations. That was your daily objective right here. And truly, I held my runner right up until we had that lunch rate, because I have no reason to get out of this trade until you get that lunch rate. It wasn't 12 hour for me. It was more like 10, I believe, with the entry I got up here. But before we have that lunch trade, you have absolutely no reason to get out of this trade. And you might say, okay, well, what about the 1050 to 1110 macro? You don't have one short setup in there. You only have opportunities to go long, right? To take a continuation long. And you might ask me, well, why are we not considering trades here? You're already too far. This is too late, right? You're up here. You already missed the move. I'm not interested in chasing, so I don't take setups like those. But right here, you're still very near your entry. Let's see, those are the criteria for me to look at a continuation. But for a long, definitely some very good return. I mean, it's pretty standard for me with CPI that I used. Well, I mean, I used to get some great results. Last 2 months weren't the best on CPI, but definitely this CPI did amazing. And then you have opportunities for retracement in the PM session, right? You have a lunch raid telling you to go short. You have everything that aligns beautifully with it. It would have just been a very, very hard trade. Because you see, for me, if we're looking at the PM session, you have the lunch raid right here, right? You're waiting at 130 to take a trade. You have a beautiful bearish breaker, and you have a bearish unicorn right here. Let me just change this to breaker block. You have a beautiful unicorn right here trading back into this fair value gap and aligning beautifully with the inversion fair value gap. Pretty tight stop there, definitely, but it doesn't matter, right? And then you have some drawdown here. You have some returns, but before you get to lunch low, it would have gone back to my break even. So that's a little bit of a weird one. But as you can see, gave the potential for 5R. I'm definitely taking a partial here, which if we look at this range, we'll look at it in a sec. Less premium and discount. Go to a 5-minute chart here. Let's actually remove the opening gap so my charts can align correctly. And previous day low is no longer needed. Where are you? Candle ranges. There we go. If we look at this, you will see first discount and efficiency is this order block, sorry. But it aligned beautifully with the swing low that we had in discount. If we go back to the 1 minute, we'll see the beautiful swing low right here that we have in discount. Is just a great target overall, right? Now, would I wait until 4R to look for a partial? Definitely, right? With lunch raids, you can have the statistical confidence. So definitely partial right at this level, and I'll move it. This is your higher time frame order block, but I would refine it to this swing low that is in close proximity because that would be the lower time frame target. And then I would just get stopped out, break even. That's the truth on a trade like this. Would I continue to look for a short after myself? No, I don't like to. But if you did, it would have been a win. All right. So, for example, you get broken even right here. You have another breaker that forms here, and you actually have another valid entry just like this. 3 PD arrays. You have inversion fair value gap, order block, order block. So very, very close to your stop loss, but you would have had plenty of opportunity for a return right here. Myself, it really depends actually, because if I didn't trade at all in the morning session, I would definitely give myself another opportunity. But this is just inducing the highs right here, just doesn't give me confidence in the short, which in this case it would have worked, but the first short would definitely be the valid one. And let's be honest here, the only reason why you're shorting in the PM is because you missed out on the morning long. Truth, you should only be trading that long and nothing else. It was a great day, beautiful return. But if you missed it, does that mean you should punish yourself? Well, that's what I do. Is it a good thing to do? I can't tell you guys. That's just me trying to build my psychology for so long. I used to punish myself. I said, you don't deserve to make money because you just fucked up in the morning. So even if I had a good trade in the PM, it would be a bad trade because I fucked up in the morning. So I prefer to just take a step back. Now, of course, as I said, I can't speak on if that's a good thing or bad thing, but that's how I personally did it. Do we have any questions? I mean, other than that, it's pretty straightforward, right? Nice long lunch rate that would have been partial, then break even, followed by a successful setup again. Hopefully you guys didn't have a rough day. I'd be more than happy to review some setups, some trades that you guys took if you have any questions. Have you ever had where your order didn't get filled fully, because it was a quick wick. No, because I don't use limit orders. So for a take profit, that happens sometimes, very rarely. I don't even remember the last time. But I mark it into trades. I like it better. I like the psychology behind it, because I mean, I could set 20 different limits, right? And I don't feel the attachment to the limits. So compared to if I'm clicking the button to mark it into my trade, it's because I'm confident in that trade. So I don't know. For me, it's just easier. Of course, when you're a beginner, limit orders can remove the stress, remove the psychology out of it. So definitely they can be something good. I personally never used them. I only mark it into positions. And yes, that does mean that sometimes I have some bigger positions. Like recently, I put a 25 contract long on NASDAQ. Was it short position, whatever, right? And I got slipped a little bit, right? So it doesn't really matter to me. That's why I do market orders. But yes, if you're scared of if you're scared of not being fully filled, definitely go into market orders. But if you're not and you prefer to just have that precise entry, and just use limits. Personally, I've never found them to be for me. But yes, it does happen. Magic. I took the 1453 unicorn back up because I did miss the AM. Also had a question about a SIBI forming on the 1545 candle, a unicorn. Didn't, what do you mean didn't? Like you didn't trade it? But checking on the 1550 candle, but would it have been a stop in the Rise model, or would you use the IFVG? Rise model is not just a unicorn. We have to make that clear. Not every unicorn is a Rise model. What makes it the Rise model is the mentality behind it, the frameworks, the statistical frameworks behind it, and the confirmations that we use that make our unicorns high probability, right? That's the first thing that we have to mention. So me checking here at 1550 and then looking at this breaker block. Okay, well, why this one and not this one? Why this one and not that one? I don't pick and choose. The first one that formed gave you an entry. I would have been in that trade. That's it. Boom. Now it stops you at break even. So the next one that forms after that can also be a setup. But nothing in between is a valid Rise model. Because that's the right one. Break even. That's the next one. So I'm not going to consider every single unicorn. Because that's the one you should have been in. Then got stopped at break even. All mechanically speaking. Right? I mean, I have a bot that trades this. Why is this one a Rise model and this unicorn isn't? Because this one came, you would have been already in this trade. It's that simple. So no, I'm not going to look at a bunch of intraday, not intraday, but intra-trade, I guess is the best way I could put it. Because I'm not picking and choosing. I'm taking the ones that show. And you're talking about the closing range, which is typically volatile. That's not something I trade personally. I know, of course, of Cold Brew. He's a great guy who trades the closing ranges, but I'm not interested in that. I was using 1535 breaker block for the 1545 SIBI. 1535 breaker block. What are you showing? 35s. I'm already in a trade there. Why are you taking that one and why are you not taking that one? Breaker block, inversion fair value gap. There's an entry just before. So you're picking and choosing. You can if you want to. I'm not telling you it's not profitable to do so, because the truth is, the unicorn pattern, right, is so good that it is profitable just by itself. Literally. You can just go and trade unicorns randomly. But that's not what I want. I'm focused on consistency, right? So I'm taking the unicorns that align with my model, that gives me a statistical framework. You know, I'm not going to repeat myself on that, right? So I'm not going to be considering anything else, and I'm going at it fully mechanically. Fucking mosquito. Careful, guys, it might shake. All right. I think I killed it. Sorry about that. I really have a hate for mosquitoes because I have O positive blood, and it is the blood that they like the most. These motherfuckers. Okay, I think I'm good. Sorry, sorry about that, guys. Um, but yes, just to get right back into it, right? I'm not considering any other entries because I'm taking the first one to present itself. And the only reason why there is an opportunity for another trade after is because you would have gotten stopped out on the one previously. So I don't consider anything other than that. Does that make sense, Peacock? I do understand there are a bunch of other valuable setups. There are a bunch of other trades that could have, would have been successful, right? They're just not me, so I don't want to comment on them. I trade one model mechanically. That's the only thing I do. So that's what I'm willing to share my knowledge on with you guys. Of course, all backed by statistical frameworks throughout the day. It does make sense, but also seems like the setup I mentioned would qualify. Maybe it does, but it wouldn't because you're already in a trade. There's an earlier entry, so you would already be in the trade. But is it a valid unicorn? Is everything perfect in the setup? Perhaps, but you would already be in the trade, so you'd never be in that second one, right? That's just what I don't like doing. But yes, definitely, right? You're talking about 1545 fair value gap, right? Overlapping with the PD array, and then we traded back into it and gave you a setup. Sure. Would it be a valid unicorn? Yeah. But you'd never be in that trade because you'd already be short. That's just what I'm mentioning. Anything else I can answer for you guys today? I know I was a bit late starting the PA review, as I said, but if you guys have questions, I'd be more than happy to finish it out. Seems pretty clear. All right. Well, thank you guys for being here. You guys have a great night, and we'll see each other back on Thursday for our next price action review this week. You guys have a great night, and good luck trading tomorrow and Thursday. Bye, guys.